Warren Buffett, the legendary investor, has a unique perspective on dividends. As CEO of Berkshire Hathaway, he famously never paid out a dividend to the company's shareholders. This might seem strange at first to investors looking for passive income. However, Buffett's strategy is deeply rooted in his belief in the power of compound interest and long-term value creation. Under Buffett's leadership, Berkshire Hathaway prefers to reinvest its profits back into the company. This approach allows the company to fuel further growth and expansion, which ultimately leads to higher returns for its shareholders. Buffett argues that he can allocate capital more efficiently than individual investors. By keeping the profits within the company, he aims for significantly higher returns than the shareholders could achieve themselves. This strategy has proven incredibly successful for Berkshire Hathaway over the decades. The company's stock price has consistently outperformed the market and created immense wealth for its long-term investors. Buffett's philosophy is simple. Why distribute profits as dividends when they can be reinvested to generate even higher returns in the future? Buffett's decision to reinvest profits instead of paying dividends stems from his strong belief in the power of compound interest. Compound interest is the snowball effect where you earn returns on your original investment plus all accumulated earnings. Essentially, it's about making money work for you. When a company wisely reinvests its profits, those profits generate further profits. Over time, this creates a powerful cycle of growth that can significantly outperform the returns from simply receiving and spending dividends. Buffett understands that every dollar reinvested has the potential to grow exponentially over the long term. This approach requires patience and discipline. It means resisting the temptation of immediate gratification in the form of dividends. Instead, Buffett focuses on the bigger picture and aims for substantial long-term growth. This strategy has been a cornerstone of Berkshire Hathaway's success, transforming the company from a struggling textile business into a global conglomerate. While Berkshire Hathaway itself doesn't pay dividends, Buffett isn't against investing in companies that do. In fact, his portfolio is full of dividend giants, which highlights the dual nature of his dividend strategy. A prime example is Coca-Cola. Berkshire Hathaway is a long-term investor in the beverage giant, holding a substantial portion of its stock. Coca-Cola has a stellar track record of paying consistent and growing dividends for decades. These dividends flow back to Berkshire, providing a steady stream of income that can be reinvested into other promising ventures. Another example is Apple. Although considered a growth company, Apple also pays dividends, making it a perfect fit for Buffett's portfolio. Berkshire's sizable stake in Apple generates substantial dividend income, which further fuels its growth engine. Other notable dividend payers in Berkshire's portfolio include energy giants like Chevron and Occidental Petroleum. Warren Buffett's approach to dividends offers valuable lessons for investors of all levels. First, he emphasizes the importance of a long-term perspective. Instead of chasing quick returns through dividends, focus on investing in companies with strong fundamentals and the potential for sustainable growth. Second, understand the power of compound interest. Reinvesting profits, whether in your own portfolio or through companies like Berkshire Hathaway, can significantly boost your returns over time. Patience and discipline are key to harnessing this power. Finally, remember that dividends are only one piece of the investment puzzle. While they can provide a steady stream of income, they aren't the only factor to consider. Focus on identifying companies with sound business models, strong management teams, and the ability to create long-term value. By adopting a similar mindset to Buffett, investors can strive to build a portfolio that stands the test of time.